Everybody, I'm Giuseppe Basile, also known as the FibStalker. Welcome to the this weekend review. I'm Giuseppe Basile, also known as the FibStalker, and I'm a full-time trader, market strategist, and mentor at FibStalkerTrading.com. In this video, we're going to do the weekend review. This is part 1. Today is April 22nd, 2018. It's 11 p.m. EST time in Toronto, and this video is part of the FibStalker Analysis and Trading Service. Now, as usual, if you have not read and accepted the disclaimer here, I want you to stop the video now and read and accept the usual disclaimer here. Thanks for doing that. All right, so let's start from our markets here, and I'm going to start from the SP 500. There were a few questions last week about what's going on at the moment, the SP 500, and this chart here might look a little bit complicated, but really it isn't. There are levels that we have identified on the larger time frame here. We can see them on the monthly as well, and one level that has traded is the 2532 level here. Okay, that level could come into play again. We don't know yet. And there is the actual extension long from our 2082 to highs here that has not come into play yet. But I want to focus on the daily time frame here, where we see this large range. 2627 has traded, and then since we saw the market moving in this large range here, and I'm showing you the top of the range and the bottom of the range. Now within this, there would be something that you can observe with your eyes here, and something that traditional tech analysis would focus on. We also focus on something different because it's so-called FibStalker sideways pattern, and actually that shows that participation of long bulls and bears keeps failing. The bears keep failing at this 61% level. The bulls have kept failing recently around this 2638. Okay, and that's actually the definition of a sideways move. Just we see it from the viewpoint of algorithms participation, not from the viewpoint of traditional tech analysis. Okay, so what it means here is that there are these two levels, these two areas really, between 2708 and 2749, which is the top of the sideways pattern, and 2670 to 2638, which is the bottom of the sideways pattern. And in here, as you can see, last week, mid of the week, we found participation on 2713 here, 2710, and on Friday and again today, we're finding participation around the bottom of the area. So this will continue between these two areas until there is a resolution of this sideways move. And sideways pattern can be continuation pattern or reversal patterns. We don't know. As you can see here, bears are coming more aggressively at lower and lower levels here, while bulls, they're not really seem not to be able to higher this price from higher levels. So this would suggest a resolution on the downside, but we will just follow what the market gives us. Okay, so we are not into predicting what the market is going to do next. We are only in the business of identifying areas of potential participation and then testing them. Okay, so these are potential area of participation, and we need to test them. So these should be tested for longs now. Okay, the problem here is that there's not really a lot of potential for a move until the pattern is resolved here. So that means that there is more risk in this market. Okay, and I don't like particularly taking more risk than what we need to with the market. Let's look at the dollar index here. Positive development for sure, and this market is on top of a very large 50% here. We can trace that more clearly here on this monthly time frame, from lows to highs here, and that came into play. Okay, so every time the market dipped into this area, we saw on the monthly here, it's now you know, more than 3 months here that this market has been hovering around this level, and this has been pretty painful. This is not the kind of market we like, because we want markets that move quickly, right, that move decisively, that they have trends. I mean, we will go back to those kind of markets, no doubt about it. But obviously, you know, especially if you trade on the larger time frame, these market conditions are not ideal for profits. But you know, forex offers enough opportunities anyway. So when we look at the dollar index here and at the daily, we can see here that we had a similar situation as we saw in the dollar index for this market, in the SP 500 for this market, because as you can see here, bears have failed and then they had success here. Sorry, bulls have failed here and then they started having success here. They failed again here, and now in the last 2 weeks, actually they have kind of recovered control here. In fact, there was participation on the 11th, and then again there was a participation mid of last week on the 17th. Now, as you can see here, the market is at the top of its range here. Okay, so the market could actually now potentially go back to the bottom of the range. The fact that the 50% here are participating is a good indication. Now, if we consider this market has been very extended in the last 3 days of last week, we could also consider a continuation with an extension. So if price gets into this area here, 89.80 in the dollar index, it finds participation, then we could see a bounce and a continuation higher. Okay, now the dailies here that have participated at the 89.10, they have targets above, very clear, 91.11, and 91.11 could be an area of resistance, strong resistance on the larger time frames as well. Okay, and let's never forget that we have you know, 50% above price, and this 50% here from a previous swing high on the weekly kind of falls in the same area where we had that first target. Okay, remember also that this market has been resisting the 90.30, which is a level of support, now resistance. So if the market moves above that level, then we are going to see we could see more upside. And this market also has an extension that came into play, and next measure move short is 92.80. So as you can see, there is a lot of resistance above this price. It's not that this price is going to move now easily and quickly higher. Okay, that never happens. I mean, not yet at least. Now, when we look at gold and silver are anticipating some weakness here, and you will remember that gold is in a very trading in a very technical fashion here since the beginning of 17. We had 50% to first target, next session failed, then the market came back into the ambush trade here, 1268, and since is looking higher, and the first target lines up with the previous size here, mid 2016, and that's what the positioning in this area at the end of 2017 is telling us. However, this move higher also had an inner measure move of 50% here, participation at 131.10, and this has been tested 2 times here. The market could come back and retest this level again. If it holds, we're going to see higher highs in gold, and the dollar is going to go back into the cage. Otherwise, this level could be broken here, the 12.95, and we could see 12.68 trading here and being retested for the second time, and that would be a dangerous test. Okay, so we're gonna see what happens here. Gap down, this could be closed. We will see depending on how the dollar index moves as well. Silver, we had a great move, great week last week, great move higher here, which has broken one of the two levels where we were looking at. Okay, so at the moment, what we have is the 1472 level, and we're gonna see whether this market, depending again, this market had to do some catch up compared to gold, so probably that's what's going on at the moment. And when we look at the sequence here, we can take the low in March here, the first target not respected, then respected recently, brought price into that second target, and so next measure move is in play at the moment, and it's being respected. So depending on what happens in the dollar index, this could break and then possibly come back into the 50% long here. Okay, if it breaks. Otherwise, this could continue higher here. There is a clean setup, and it could continue higher. When we remove the previous measure move here, the new measure moves has the potential to bring price into 1743 and 1763 if you are willing to get long silver. Okay, so let's move now to the majors, and I'm going to start from the Australian dollar, US dollar here. You will remember that this market is on a very large time frame trading between the extension short from lows in 2014 here that played a number of times here, July, mid last year, and then again at the beginning of the year. So if this is a range, we anticipate some sort of retest of these lows here. Remember that this is this high here was not a 50%. Sorry, this low here was not a 50%. Okay, so I'm not looking for the 50%. I'm looking for lows in this range here, and there is a sequence of measure move that is actually supporting this view. We can see it on the weekly here, lows, highs to lows into first target. Market stayed basically 3 weeks around the level, 2 weeks and something, and the next measure move then finally traded very quickly. One of these 2 days when these highs were revisited. The first time this level didn't trade, the second time it traded. We had 2 strong days of move lower here, some profit taking here, and we will see whether that level is retested or the market goes continues lower into 75.62. So there are news on Tuesday, so the CPI for Australia, and so that could either help price lower or cause some sort of retest. Although this market is very it's pretty weak here, and it has traded already the 50% short. Now what I have here on the chart, just disregard the other lines, but there's a 50% short here from lows to lows, and that's the 76.82, and you should really watch this level. If it's tested successfully, this could be a new entry short into the first target and potentially even the second target, but I'm looking at the first target here. Sorry, the second target will line up with the first target of the larger measure move, the one that has traded in the continuation of this sequence here. The previous was this one, and the second one is this one. So the second target of this inner measure move lines up with the first target of the 78.15. All right. Euro dollar, finally we're seeing a little bit of weakness in this market. It has been moving largely, likewise the dollar index, of course, for several weeks. Not the best condition for us to trade, at least this market, but there were very good conditions before. Look at how beautifully this market has trended in 2017, and also here in the last part of the very first part of 2018. But since then this market has moved laterally, and it has not been very technical as well. So obviously when the markets are lateral like this, we get a sideways pattern, and we know that the market are going to oscillate between these two areas until one of these two areas is consistently respected. So if this is retested, if 123.56 is retested and the dollar index continues higher, we are going to look for this level now holding. But so far both levels have not been holding. Now this market could just continue lower here on strength of the dollar index, but we will see what happens this week, whether this 23.56 is retested or this market just continues lower. So until this market exits this sideways conditions here, very painful, and measure move start working here, then we're gonna get into more technical and trending market conditions. There were opportunities in this market as well, in any case about 50% longer short on the smaller time frame, but I personally like to trade on the larger time frame, so I want to see trends on the monthly, on the weekly, and then it's much easier and much more lower risk to trade this market. So a little bit more weighting in this euro dollar. Same we can say about the pound versus US dollar here, and we had sequences of measure move here. This market is not famous to be very technical, but there are always technical moves as well. 50% here could be broken in sequences of measure moves on the daily, and this market also gave a full 50% here within this move higher, gave a full 50% at the beginning of April. Not you had to be prepared for it, and we have been looking at that correction of the dollar index for forever now, and it's very important to it's much easier and much lesser risk when we are aligned with the dollar index. So these moves are not always easy and simple to take. The next measure move here on the daily failed, right? And so the market came into the next measure move, which is what we're seeing at the moment here. The lows to highs, it's holding for now. I do not anticipate that to keep holding forever, and if the 139.67 fails, then this market could come back and retest the 138.23, and this would be a second test. Okay. Now, US dollar, Canadian dollar, this market has traded 50% on news last week. So when we look at the larger time frame for this market, we know that bears are in control. Bears are in control since April on the weekly time frame last year, and then again highs to lows came into play end of 2017 and also recently here in March. Okay, the point is also from a fundamental point of view, we should see the Canadian interest rate moving higher in the future. So we'll need to see whether this market wants to retest the 50% short here again, or if it's ready to move lower. And the measure move I'm talking about is the highs here, and look at how 61% level was defended to lows. So if the 128.26 trades, that could be an opportunity for a short. So I'm gonna put a reminder here that if this area trades, then we could see a move lower. Of course, the market can move lower anytime here, but that's what's happening here. Although this area here was not trade cleanly here, we can see that the price went well into the area, which means that there is not a convinced participation, which keeps building the case for shorts at the 50%. So Swiss franc has been a beautiful and very technical market on the other hand recently, and it now seems to be wanting to be to bring this last measure move into the second target. I want to remind you the beautiful sequence of 50% here that we had in this market, and 50% to first target, 50% to first target, so three sequences in a row here to first target, and then again the 50% to first, and now we are approaching the second target as well. Now, as I mentioned last week, if the second target is hit, we are going to start drawing from highs to highs until this sequence fails, and then this market is very extended on the larger time frame, so we could actually see an extension long trade on the larger time frames as well. Okay, so very technical market to be followed. The other Japanese yen here is also in a lateral move, this time in a very large time frame. Look at how many months this market has been trading basically laterally in a very large range here. But as you can see here, when we trace the longs have not held. Bears initially have not held too, but then as you can see, bulls held, and now bears held as well. Okay, so bulls are not holding this market, but it doesn't mean that this market cannot retrace on smaller time frames, on the activity based on the activity of algos in the smaller time frames. Okay, so and that could so clearly here the bears are in control on this larger time frame. Okay, on the smaller time frame the market could continue higher, and at some point bears might come back again into the market, pushing this market lower into the 166, and that's where 170, that's where we could see this market. Now the extension here is in play, and as you can see here has been rejecting price for 2 weeks, and we are seeing this week we are seeing price actually start dipping into that area. Okay, there is also a 50% long on the daily time frame here that is supporting price higher 105.80, which was already priced into the first target. However, the next measure move in this specific market has not traded. Okay, which means that this market is continuing in extension, and if the move higher continues here and the bears do not show up at this extension short, then we have the potential to move higher into 108.52. Okay, and so that's what we're going to see and check this week. If that happens, then we can get even to higher prices, potentially 109.68. New Zealand dollar, US dollar, it's pretty weak here, and differently from the Australian dollar, this market has a very technical take here when we look at the monthly, because the 50% short, I'm going to trace this more precisely from the highs, recent monthly highs to lows, as traded here in July last year. And you could make the case, well, it has not traded yet, so we could see this market moving ahead. While that's possible, a test of the high of the range here has happened, and look how many months these levels have been rejected. So although you know, a test of the 75.23 will give us more conviction in this move lower. It doesn't mean that this market cannot move lower, and if it moves lower, then we're likely going to see the 68.48 trade again. Okay, so let's look at what the smaller time frames are telling us. From a short point of view, they're not telling us a lot. It's only price action that is showing us that this market is being sold. Not on the short bear side, but on the long side, we know that there is this area of potential participation that has been tested a number of times and is going to be tested again. And you know, if nobody shows up here, no bulls show up here, then it's going to be our confirmation that, you know, this market has the potential to revisit 68.47 in the coming weeks. And if that's the case, I don't care how many weeks it takes, because you know, we can participate in the move lower. Okay, so very important to understand what's going to happen in this market in this area here, and it's being tested, or the test has started. We will need to see whether this market goes below the 71.50 here. If that's the case, then there is a potential for this market to continue lower. There will be very little resistance here. All the support and previous zone of support here, it's in this area here. Below this area here, we could see a quick move lower into that level. And finally, for this first part is the US dollar Singapore dollar, that obviously it's behaving like the dollar index. You know, I like to use this market as a proxy of the dollar index. So if you don't have the futures price, you know, very often you can look at this price and figure out what is likely to happen on the dollar index. So that's the way I use it. It doesn't mean that the dollar index will do exactly what the US dollar Singapore dollar is going to do, but I believe that these two, the Singapore dollar, it's also basically based on a basket of currency which is undisclosed, but when we look at the price of the US dollar Singapore dollar, we can clearly see that the that basket might be very similar to the dollar index basket, and that makes sense, right? Because you know, we might think that China or Singapore, they have the same trading partners, and maybe they have proportionally the same volume. And actually, the economy of Singapore, it's actually 1/6 of the economy of the US, so it's pretty strong. And so it's likely they have the same trading partners than that US has. Now, when we look at price here, again, likewise for the dollar index here, we have 50% long prices within this area, 3 months, exactly like the dollar index. And now we can see that this market is emerging from this pattern here. I don't look at these patterns, I just trace them to see what other people see, what the traditional technical analysts see, and there is a large amount of money, not only retail, which is only 5% of forex, but there is also a large amount of money, professional money, so-called professional money, that is traded with this pattern. So it's important to see what happens there. So what we could see here, it's a continuation and then a retest of this 31. So we could use the deja vu FibStalker pattern here and see what is the level that, you know, in the coming session could actually trade and then quickly give us a retest. And I'm using 132 here, but it doesn't mean that the price will get there. Okay, that's just an extrapolation, pure speculation here. Okay, but the most important information we want to get from this, because there's very little to trade here, it's like for the dollar index, right, and the euro. We want to see the size move higher and the market coming back maybe on a 50% and start trading more technically. Okay, I mean, this market has been technical in the past. You know, it gave you know, beautiful measured moves here, and it's going to happen again. So it's just a matter of waiting that these sideways conditions are resolved, and then we can start again. Okay, so this is the first part. Thanks a lot for watching. I'll see you in the second part. Bye bye now.